All right, my friends, it is that time. Today is Sunday, June the 26th, and so it is past due time to get our week in review video out from last week, which obviously started on the 20th, but that was a holiday for the stock markets. We were closed. We had a shortened trading week, a 4-day trading week. And this is a review of that week of June 21st through the 24th. So some good, some bad this week. I think that obviously the key is always how important it is to learn from things that don't work. And I'm going to try to put out a video here probably tomorrow night, probably Monday evening, on the second edition of the number one thing that you need to have as a trader to be successful. And it's part of it is how you view your losses or how you approach the idea even of having a loss. But nevertheless, let's get into our week quickly here. Tuesday, obviously, we started this shortened trading week off. We did start with a 0 DTE on the SPX. Almost all of our activity this week was confined to the SPX. Although I do have a shorting position on in the NQ here, which you'll see in a moment. But we did have a 0 DTE to kick us off. I started with 13,000 of buying power in that trade. Again, we usually try to start with about 1/3, or maybe even in this market a little less, 1/3 of your capital that you've committed to the trade. So I did have just about 30,000 that I could commit that day. I was able to get about 1/3 of that scaled in. Really nice day. Anytime you can get a double-digit profit return, which we're right here, about 10%. On the trade is ideal for us. It's a picture perfect day. Our IWM weekly credit strangle, very similar results to this week from last week. About $2,200 of buying power put up into that. And we were able, even closing it out, I did close that out early, that trade on Friday, $25 profit. So above our 1% a week, 4% a month, 50% a year annualized goal of returns. And we've started to affectionately call our IWM weekly credit strangle trade our little millionaire retirement account. We played around with some interest rate assumptions and compound interest, and of course that is a dangerous road to go down, obviously, because whatever numbers you put in, when you start extrapolating that into the future, you know that it's not going to be right. So it's absolutely not going to be right, but it's still interesting to look at the numbers. And what we looked at was using about $12,000 in the IWM weekly credit strangle, and at 1% a week, about 4% a month, or around 50% a year, that is $1 million. That $12,000 turns into $1 million in 9 years. And so, I think if you told most people, hey, if you got a $12,000 retirement account, you can become a millionaire, or any account for that matter, you can become a millionaire in 9 years on that. Well, there's no guarantee of that, but that's certainly what the potential is here. And we're actually, as I've mentioned in previous review videos, we're actually ahead of the game here. Last year, 2021, was pretty tough to get that 1% a week. This go around with this current market volatility has been quite easy. So we're actually annualizing out right now above 60% annualized rate of return on our IWM credit strangles. It's one of our absolutely funnest, most solid, and easiest to repair, I will say, trades that we do. We did close out our bear market trade. I wish I could find more of these. They have been so gosh darn successful for us, and this trade was no different. But it sounds counterintuitive. It's actually easier to find the bear market trades when we're in a wildly bullish market than when we are in a bear market, because obviously the way we make money with a bear market trade is with stuff going down, and when stuff's already going down, it just makes it that much tougher. It's a lot easier to find things that are at nosebleed levels. So we'll continue to look for some more bear market trades. They've obviously treated us really well. We had an implied volatility trade that we put on with Rite Aid, and it was a non-mover trade, meaning basically it was a credit strangle that we put on, very small because RAD is a cheap stock. Only took $250 of buying power to put that trade together, and I was really committed and really excited to either be assigned on the short side if we got hit on the calls, or on the long side if we got hit on the puts, and then I would cash flow that 100 shares. So it was a little simple trade. Unfortunately, the day that the earnings came out, we also had news that there was potentially a hostile takeover bid in the works. And I don't want to be involved in a trade like that because you just don't know what the outcome is going to be. And so we did just close it down. I guess we are fortunate. We did fall into the profit zone. Heck, on that buying power, again, it's still 1%, but just didn't quite do what we had hoped for. And that happens sometimes. That's one of the reasons that people, including ourselves, love to trade indices, because you don't have these types of, nobody's going to have a hostile takeover over the whole entire stock market, right? Our 40 ETE trades on our SPYs and our Qs. So again, a lot of lessons to be learned this week, and this was one of them. We pulled these trades off early on Friday. Now, we were up against the gun a little bit on it anyway, of course, because it was a shortened week, so you lose 1 day of theta. And our goal with our 40 ETE trades is about 10% profit a week. Again, there's no guarantees there, but that's what we shoot for, and it's usually there. If we can execute properly, that profit is there. Well, this week on both the SPY and the Qs, we had well above a 10% profit potential for the week on both of them, but I pulled both of them as we started off the market on Friday, and there was some wailing and screaming and some gnashing of teeth inside of the trading room saying, hey, both of these trades expire here in 3 or 4 hours. They're both solidly profitable right now, and you're leaving about 50% of all the profit on the table. What's going on here? Well, number one, again, it's always prudent when you're in a profit zone to take that profit, I believe, or at least start taking the profit. Number two, those same people that were, belly aching at the start of the morning, hey, why are we taking these off? They said, gave a lot of thanks at the end of the day, as we would have probably moved one of these for sure, the SPY for sure, but I think possibly even the Qs as well, into the loss zone. And then you're dealing with adjustments and rolls and things like that. Whoops. So anyway, I think that we traded Tuesday very prudently, $1,684 of net profit on the day. Wednesday was just a pretty singularly focused day. All we did on Wednesday really was the zeroed ETE SPX trade. I got good grief, I don't know why I keep hitting that, excuse me. I had 17,000 of buying power put into the zeroed ETE, and again, it was just an absolutely stellar day, $1,740 profit on that trade, and that was it for the day, but nice solid day. Okay. Thursday, we did a zeroed ETE as well. And it was a little bit of a different focus for us on Thursday. And because of that, I never really was able to get a lot of buying power committed to the trade, which is really unfortunate for this particular zeroed ETE, because I can't remember what that was, 14.5% return, which is just out of the park for us. It's one of our higher performing percentage-wise trades, and so of course, because of that, I didn't end up getting very much buying power committed to it, but it was still a really solid day nonetheless. Now Friday is where we run into problems, and so I have been trying to condition, or I guess you should say recondition, our trading room for what, 4, 5, 6 weeks now, pretty much leading these videos off every single week saying, hey guys, listen, mathematically, our results can only get worse, they can't get better. Unfortunately, I was right. It's been a long time since we had a losing trade on a zeroed ETE. We'll see the track record here, obviously, in just a second. But I did take a $4,800 loss on the zeroed ETE on Friday. Had what I thought were some really solid levels, primarily the 3,900 level, or 3,895 to be exact, but right around that 3,900 level, and we pushed through it. So your levels are only as good as you in terms of picking them, and it was a level. It definitely was a level, and the market recognized that level, but it didn't hold it. It recognized it, but it certainly didn't respect it. So that's my biggest loss on a zeroed ETE for this year. So it's a little bit of a bummer, because it's going to probably take me, based on my average win size, probably 3 or 4 winners. So it may take me all of this week to get that back. But that's the nature of trading, and unfortunately, we had a lot of people. We've got a bunch of new members in our trading room that I think I don't know how best to put it. Maybe they're here for the wrong reasons. And when I say the wrong reason, they're not here to learn how to trade and how to see what I do as a trader. They're here because they have seen our amazing track record and they think it's just, hey, sign up and money will start being ACH deposited into my bank account. But losses are a part of it, and I will make one guarantee. There's not a lot of guarantees in the marketplace. I'll make one guarantee. We'll have more of these. We will have more of these. Every trader that has ever lived or traded will continue to have more of these. What we can try to do is minimize this number. Not the fact that it was a loss, but the fact that it was $4,800. I generally like to keep it so that 2 or maybe 3 winning trades are what I would need to offset a losing trade, and I'm probably somewhere in the range of 3 here. If I threw my normal buying power here and we got 3 successful trades, I would probably be very close. But it could be 4, could be 4, could be 5. So it's a little bit more than I generally want to accept as a loss. Accepting losses is fine. That's part of the game. But that percentage-wise, that was a little bit too much for what I normally would prefer. But I will say this on Friday. I could really care less about the SPX trade because we've gone so darn long without having a single loss that gets easily absorbed into my P&L. But I'm not happy at all with this soybean trade. It has been a while. I will say this, it has been a while since I have been as frustrated with myself as I was on the soybean trade. So we had a really nice, what I believed was a really nice soybean trade last month set up in soybeans. And it looked solid. We were trading wheat as well, and everybody was worried about the wheat trade. Well, the wheat trade expired fully profitable, incredible trade. And the trade that none of us were worried about, the soybean trade, it pushed right up through our resistance levels and just kept on going. So I laid out a premise that I felt like it was overextended to the upside. We're going to roll it out to the next month, which was this past Friday when it expired. And we're going to just sell the calls first because we're up here at resistance. I'm going to wait patiently for it to slide back down and then sell the puts. And that would really juice up the potential return. Well, we got part of that done. And that was my game plan, and I think I had been pretty clear and transparent on that game plan. Got the call side in, couldn't get the puts in. Couldn't get the puts in. Was just said over and over again that I wanted to see this thing slide back down to around 1650 before I put the puts back on. I just wasn't disciplined enough to wait. Whoops. I just wasn't disciplined enough to wait on that trade. And so we were just very, very fortunate. I will say that. It was just fortune more than anything that allowed me to exit the soybean trade on Friday at a very slight profit. Could have been a really great trade. And this trade right here, sometimes it's just the way the cookie crumbles, and that's how the 0DTE was. Broke through a level that I felt that I had a lot of confidence in. But sometimes it is all owner's error, operator error, and that was certainly the case in the soybean trade. Not very happy with my discipline or execution on that trade. Should have probably stuck to my guns. And then our ABG DAN pairs trade, we finally closed that out on Friday, again at a very bare minimum of a profit. This was a pair, and you know what? I think that this ABG DAN trade, pairs trade, probably one of the best examples of the power of pairs trades. Obviously, the market's been very volatile, and one of the components to a pairs trade is it doesn't matter if the market is, good grief, I got a whole itchy trigger finger here. It doesn't matter if the market is skyrocketing or crashing to the ground. None of that affects a pairs trade. It's not directionally biased. And so that was nice, that it never really got hurt or helped by the market shooting up or down. We ratioed this trade a couple times, and it just ended up being a trade that just didn't work. But we kind of forced it into a mild profit zone after all the fees and commissions were able to exit it. So that's fine. It allows us to live to fight another day. And make sure that you watch my weekly preview video that will be coming out early tomorrow morning before the market opens up. because I think we're going to be coming back to this well again to find some new pairs trades. But anyway, bad day overall. Net result for the day was a $4,676 loss. So net result for the week, you know, I've really grown accustomed. I have really grown accustomed to this JPEG right here, this picture right here. But unfortunately, this is more what our week looks like this week. Now, that number is wrong. I need to change the number to the correct number. All righty, there we go. So the net result for the week, almost $50,000 of buying power deployed. I'll talk about why that number is so high here when I go over what open positions we still have working down here, but they're absorbing a lot of my buying power here. So it was a pretty heavy week from a buying power standpoint on the max buying power deployed, but it was a below average week in terms of what our normal zero DTEs look like. So a little bit of a mixed bag there. And after everything was said and done all week long, I end up with a $712 net loss on the week. Could have been, I was going to say I could make more at McDonald's, but I could have done better just never opening up my computer all week. But that's how it goes sometimes. That's how the market plays out. And we've, again, had just this absolutely awesome run of success. Now, word of note here again, we've got a lot of trades that are still open. We did redo our oil trade. We used the futures contract. That is, it's in a nice profit zone right now. And we need to figure out here on Monday if we just want to book our profit on this, or we want to keep rolling with it. It does have 3 weeks left in it because it is the futures contract and they only have monthly expirations. This E-mini and this NASDAQ right here, futures contracts, these are where most of that buying power is deployed. I am short right now, both the E-mini and the NQ, and there's a little bit of a mixed bag here on both of those right now. Excuse me, I'm down, obviously, after Friday's shoot up to the moon like it did on Friday. I'm down on both the short ES and the NQ position, but I'm up on the cash flow components of those. But the overall trades on both of these are in the red. They're not in the profit zone yet, and it's yet to be determined where I'm going to end up on those. So obviously, all of these trades that are open, we bring those in to the net results of each week once we have a result on those. Same with our NVAX trade. Man, it just did not work out for us. NVAX trade, we rolled it. This is our second iteration on it, and we're now going into our third here. Really didn't have much of a choice here with the NVAX trade other than, from an adjustment standpoint, other than to roll it at a debit. So that means that I've got to do some work here on the put side of this trade this week to compensate for the cost of the debit. It wasn't a huge debit, but it's going to be a little bit of work to move this back into the overall profit zone. And then we do have the yen trade that is still open and working as well. So we'll let those continue to work. But yeah, overall net loss on the week of about $700. But in terms of performance, still really happy with our overall performance in the program. It's hard not to be. We're up to 76 days of zero DTE opportunities. We've done 120 total trades. And with that extra loser that we've added to the mix now, we're at 116 winners and 4 losers. So, you know, it's a little bit of a bummer, but when I say, you know, it's going to take me maybe 4 winners now, it might take this whole week to get back into the profit zone. And you see, there's a pretty good probability that we can carry that forward and make it not a big deal. But again, remember that we do record all of our live trading sessions, our Zoom sessions. So make sure that you use that link inside of Discord. You go up to the top of Discord, hit the pin, and you can watch every one of our Zoom sessions be recorded and check those out. So still really happy with the zero DTE results, but again, this is not really the important number. The dollar amount is the important number. So I needed to work on that. That's probably my biggest takeaway from my zero DTE on Friday. Not that it didn't work, because not all trades are going to work. We understand that. but just managing the dollar amount that is at risk in that trade. Our 4DTE trades, again, man, that was a bright spot for us this week. Up to 86 wins, 7 losses now. And they have been really, really solid trades for us as of late. It is interesting how it ebbs and flows. You know, we talk about all the time in our trading room how if you're going to if you are interested in the 4DTE approach, make sure you definitely do both. Do the SPY and the Q, because they do move in different manners. Over the long haul, they're pretty closely related, but on a day-to-day and week-to-week basis, they definitely are different. And it's also, even if you look at it at a bigger picture, you know, even if you're only really interested in the 0DTEs, doing the 4DTEs as well, or vice versa, if you're only interested in the 4DTEs, doing the 0DTEs as well, it gives you a nice balance. When one is not working, it's nice to have the other one hopefully working and give you a little bit of that diversification. But we had a good week in spite of needing to pull our profits earlier than we would normally like on our 4DTE trades. Our IWM weekly credit strangle, again, I'm calling this our $9-year million dollar retirement account. Now, again, there's no guarantees. You guys know that. I never try to throw hyperbole at you and say this is going to make us all $1 million bucks, but boy, it has been one of our best performers, one of our steadiest trades. And you know, if you're turning your nose up at 50-60% a year return potential trades, you might have an expectation problem. But anyway, it's been a great trade for us. We are finally able to escape by the hair of our chinny chin chin that last pairs trade, and so that frees us up to be able to start looking at some new ones here. But that's been an awesome thing for us this year to add. The bear market trades, again, we had that one winner there on Merck, and again, they're hard trades to find, but we'll keep looking for those. Any chance we get an opportunity to throw a bear market trade on, we love them. They've had, you know, it's not just this number right here. People will look at our IWM trade and they'll say, well, these are fantastic numbers, obviously, but man, 1% a week, it's hard to get excited about that. So that's why I keep talking about this millionaire making account potential that we have here. 1% a week is amazing, but you know, as traders, we obviously want more than that. Well, the thing that's been great about the bear market trade is not necessarily that amazing track record, but the fact that, you know, we over the 3.5-year period that we've been trading these, it's been very close to 115% per year, year after year, annualized returns on those. So again, they're hard to find, but if we can keep finding them, we'll obviously go with them. We'll use them. Our Tuesday, Thursday butterfly trades that we start off with a broken wing butterfly or a butterfly or some low risk asymmetric type trade, and we only had one shot this week, so we go from 13 to 14 total trades there, but it did end up being a winner. It's about 15% profit. That was that really nice day where we didn't have to put a whole lot of buying power into the trade to make it work for us. Scalping results, I still have both of my swing trades open. I've got a short E-mini position open, and I've got a short NQ position open, and I need to keep cash flowing both of those. I need to keep bringing in some income on those while I wait for the market to go down. Now, here's my little plug on that, talking about while I wait for the market to go down. Here's my segue or little plug. Make sure that you watch tomorrow morning before the market opens up my weekly preview video, and it will talk about some of the technical levels that I'm looking at, because the big question I think right now is, you know, are we back to a bullish stance, or is this a mini bull market in a massive bear market? And I'll show you some facts and figures. You can make up your own mind on that, but I'll show you some facts and figures that I think will hopefully help you on that. So make sure you look for that video in the morning. And then our asymmetric trading system. Oh my gosh. Again, I know everybody teases me that, you know, I like to talk about the asymmetric system as like my firstborn child. I mean, it's just been phenomenal. And I want to give a huge shout out to one of our members inside of the asymmetric trading system. That's Tim. It goes by the username TKL Adams. Tim, thank you so much. I have been just so backed up and buried that I need to get all of the information that we are compounding inside of our AST program outside of the room so that you guys can see the amazing results that we've had. Obviously, 2021 was a home run. We almost doubled the market returns, and we did it at 65% less risk. Well, Tim, thank so much to him. He actually put this together for us. This is a tracking, sort of a dot plot, if you will. This is a tracking of the last update that we have on the public side on the YouTube channel, which was January. This is picking up from that result in January of how my account balance has performed over that time frame. And you know, it's quite nicely, I think, here juxtaposed against the stock market in a whole. This type of a performance is crazy impressive in any market environment. I think that there's not a single person that's not going to raise their hand and say, no, I love this. I think this is absolutely tremendous and fantastic. But when you put it against the backdrop of what's actually been happening in the marketplace, you know, we're down 20%, this absolute bear market that we're in, one of the worst starts to a market in the history of the entire stock market. And this is how our AST account is going. Man, it's just been awesome. It's just been absolutely awesome. So first of all, thank you, Tim, for that. I appreciate you taking the time to put that together. And then number two, just loving the AST program. Our dragonflies, again, a little bit like the bear market trades. They're kind of hard to find, but we'll be looking for some more dragonflies, and our double diagonal worked quite well also. Although I will say that putting together a properly priced calendar spread right now, which is essentially what a diagonal is a little tough right now. So I think we will be back to the well here, looking for dragonfly opportunities very soon. Maybe double diagonals as well. Anyway, thanks again, Tim, for putting that together. I just couldn't be happier with the AST model. That's it for this week, guys. Again, keep your eyes posted tomorrow morning for the weekly preview video. Well, once again, if you're interested in trading with us, we do have an absolute no risk guarantee. You can prove to yourself whether this is amazing or not, and you can do it at no cost. And then if you do sign up for your first month and hang out with us in our trading room, and you don't think it was just absolutely amazing, I will double your money back to you. No questions asked, except for the questions that will be asked, which is detailed in the video on what you need to do. Obviously, if you're just sitting on your couch not doing anything, it's pretty tough to blame that on the program or the system. But if you'll follow through on the things I ask of you, there's absolutely nothing that you need to be worried about in this program. So I'll drop a couple of links in there. And you know what? If you are looking for a more passive approach to investing, that's our asymmetric trading system. If you got an index fund or money that is in a mutual fund, heaven forbid, or something like that, and you want to try to put your money to work in a way that has consistently beat the overall market, and B, you want to do it at less risk, you might want to check out the AST program. So I'll drop a link for that as well. Anyway, thanks for you guys sticking with me. I always appreciate your guys' comments, and when you guys take the time to just touch base with me, I appreciate it, and I appreciate you guys that do follow these. Hope your trading is going well, and I'll see you guys back in the live trading room here tomorrow morning. Take care.